Right. Good morning, investors. Welcome to the first webinar of 2023. I am incredibly excited to be with you all to kick us off into the new year. Guys, we had one heck of a 2022, rather volatile, if I don't say so myself. For those of you who are brand new to the webinar, this is your very first webinar. My name is Ari Gutman. I'm a customer success manager here at TipRanks. And I do have my colleague in the room. His name is Daniel Rosen. He's got that orange TipRanks background. And I'm mentioning that he's here with me because I always like to share that I am not the biggest technical guy in the room. So if you have any technical related questions, if you're experiencing some troubles while we're on this webinar together, please send him either a direct message or just ping it to the group chat and he will answer you. We'll get that all squared away. Now, guys, if you're brand new here, what I do week to week is actually break down our economic backdrop first and foremost, and then I get into usually the TipRanks tool of the week. Now, that's a highlighted tool that we're highlighting for our users, for our TipRanks community, to then be able to better understand how to use it and when to use it. However, this webinar being the very first webinar of 2023, we have something incredibly exciting for each and every one of you in our entire TipRanks community, whether they're joining us on this webinar or not. This webinar is all about 3 brand new features because we are constantly listening to our users, to our community. We're constantly listening in. And so we're now delivering through on 3 brand new features for every single one of our TipRanks users. And of course, this is exciting because now, as if we weren't already leveling the playing field for investors across the board, I believe we're truly taking one step closer to just doing exactly that. So without further ado, guys, I just want to kickstart us with our economic backdrop. Now, the reason why I start with our economic backdrop on a week-to-week basis is because before we pick up those TipRanks tools, we may be in line, maybe at a Walmart, a Dunkin' Donuts, a Starbucks, wherever may have you, chatting with friends, families, and we hear these stock ideas. And then we typically, a lot of people will just jump right into a stock page and then see the chart. And then maybe it's green and then they go ahead and proceed to buy. I want to begin this year off on the right foot. And that is making sure that before you ever execute a trade, whether it's a buy or a sell, you're doing your due diligence and you're not just listening to noise. So what does that really entail for investors across the board? It's our economic backdrop. It's understanding, at least at a macro scale, what exactly is happening before we even get to trading in positions or investing, buying or selling stocks. Now, guys, I want to start by sharing, I think what the obvious is that we ended 2022 with no Santa Claus rally. Now, weeks before that rally was supposed to take place, there was a lot of economists and investors across the board, myself included, who thought that there would in fact be a Santa Claus rally. Now, I was under the assumption that we would get that Santa Claus rally because there's not a lot of bad news coming out from the Federal Reserve. People were expecting that their tone would be a little lighter, if you will, that there would maybe be a pause or somewhat of a pivot to come. And we got a 50 basis point rate hike, that last interest rate hike decision of theirs. And that really wasn't the driving point to basically drive away that Santa Claus rally. What drove away that Santa Claus rally was the tone of the Federal Reserve remaining hawkish. Now, we ended 2022 at an inflationary reading level of 7.1% inflation. That is what we are walking into 2023 with. I'm not too surprised that we are currently where we're at in the market, ebbing and flowing, if you will, our way into 2023. Now, if you were on the past webinars a few weeks before 2023 actually is now, has approached, you would have heard me say over and over again, we're very likely to ebb and flow our way into the new year. Now, I was sharing that because I'm watching 2 things constantly when it comes to the market. I'm watching inflation, I'm watching as well our employment rate, and then I'm also taking a look at the tone of the Federal Reserve. So what we have coming up now in front of us, just to better paint this economic backdrop, on January 12th, we're going to get the next CPI reading. That's our inflationary reading. That will be key. But even more so importantly for all of us investors, especially if we're trying to understand the volatility, if it's coming our way when it comes to the end of January, is the next FOMC meeting. That's where the Federal Reserve will actually come out and announce the next interest rate hike, if there would be one. Now, guys, a couple of things on the docket just this week that I actually want to take a look at. Earlier today, there were reports that Salesforce actually laid off 10% of their workforce. I'm going to say that again. Salesforce, as of earlier today, that there was a report that they were laying off 10% of their sales force. Now, throughout 2022, we had a handful of tech companies that were laying their employees off. Not too alarming, right? Interest rates are going up. The hardest hit right off the bat, typically tech companies. But guys, what we could very well see moving into the new year are those layoffs moving in actually into other sectors. That's what we're going to be watching for. And now today we have two reports coming out, the JOLTS report, and we also have the FOMC meeting minutes. Now, I want to remind you all that those minutes will come out. There might be an initial shock and awe, but as investors, we need to keep in mind that the FOMC meeting minutes, when they are released to the public, when we can finally go through those minutes and digest them ourselves, we have to understand that those minutes are reflective of the past, and the stock market is a forward-moving vehicle. So in understanding just that alone, don't let that be right the minutes of the week or the report of the week, the economic data set of the week that you're really watching and then reacting to. I want to jump into Friday of this week, where we're going to get an incredibly important employment report that will come out. That's the report to be aware of this week, to keep your eyes on this week, because that's the report that the Federal Reserve is really going to be using this week and rolling into the remainder of the month, that we have an incredibly strong and robust labor market. Now, that is key because inflation's above 7.1%. Everybody is sharing that if the Federal Reserve continues to move in the direction of hiking those interest rates, we're likely to tip into a recession. But here's the thing. The Federal Reserve is looking to get that unemployment rate up. Right now, it's about 3.7%. They're looking to get that up to about 5%. Now, the terminal rate, as of right now, that's the interest rate the Federal Reserve will keep jacking up. That's coming in right now around 4.2, 4.5%. They're looking to get that rate up as well. Now, when they jack up the interest rates, guys, that's hopefully driving unemployment up, which is good because the Federal Reserve is most concerned about wage inflation, and they're trying to deliver through on price stability. Those are those words we keep hearing Jerome Powell deliver through on. But as an investor, guys, and I'm painting this economic backdrop, I'm taking a look at it, and I'm thinking to myself, one thing and one thing only: how is this going to impact me? How is all of this information going to impact me? Now, I'd like to share with you guys that since 1948, guys, we've had statistically 11 recessions. 11 recessions since 1948. That's just about a recession every 6 years. So I'm not standing here and cowering back as an investor and being fearful about what the market may bring my way. I'm actually embracing it. Now, I'm embracing it for two reasons, guys. I'm embracing it because volatility and fear in the market brings opportunity. That's number one. And number two, why I'm even more excited, and specifically when it comes to TipRanks, is because the investor who's ultimately going to prevail is the investor who has the most information at their fingertips. I'm going to say that again, guys. The investor who is most likely to prevail, regardless of our economic breakdown, right? That economic backdrop, is the investor who has the information at their fingertips. That comes across the board. It's the investor who's informed. What's going on in my economic backdrop? That leads me to what sectors I should be looking into. Then I'm looking into sector by sector. And now I'm on TipRanks, and I'm really trying to divvy down and double down on what stocks are actually going to fare me well as an investor. So with all of that said, guys, I now want to jump to TipRanks. And before I share my screen with you all, I want to double down on the fact, guys, that these are 3 brand new features because we, TipRanks as a whole, have been listening to our community members, and most importantly, remaining strong with our mission on leveling the playing field for investors, making sure that we're becoming the HubSpot for investors for whatever investment information that you guys need. How do we deliver through on that? So we're kicking off the year the right way, but I want to let you know, guys, this is just the very beginning. 3 products that are rolling out, that are already rolled out, but we have plenty more to come this year, which now I'm going to share my screen and bring you to our very first feature that was just added. I'll take Zoom away. Now here we are, guys. We are at the homepage of TipRanks. Now, the very first feature I want to go over, guys, is we have finally added futures to the TipRanks website, as well as the mobile application for you. It seems like a very simple tool, something that we should have had. And matter of fact, now we are delivering through on it. What futures allow us to do as investors is get a better understanding about how the market is about to open. So that's a very simple feature that we rolled out, guys. And I put that one first because it's so simple. However, I want to move into our very next feature. And I'm going to use, just for the fun of it, I will use Apple. Apple's one of my favorite tech stocks out there. But here we are now on Apple's page. Go to year out. Now, I always like to, guys, as I go through these tools and features with everybody, kind of share with you guys how I look at stocks and how I'm utilizing TipRanks. So before I get to this brand new feature, guys, I want to have you know that Apple, just like all the other tech stocks, has certainly been struggling on the year. Now, the very first thing I actually like to see when I land on a stock page is red. And I like to see red because it puts a flag up of mine to say, hey, let me do some more due diligence right now to see if this is an actual buying opportunity. So I can see that Apple is down 30% on the year. And now I want to do my due diligence, guys. This leads me to my very first new feature here when it comes to the actual stock pages. You can see I went over to charts here. And as we scroll down, guys, you're going to see now a tab that says events. You click on events, and now you're going to get some opportunities to check off dividends, earnings, ratings, and insiders. Guys, this is now advanced charting. This information that we're delivering through for you to look at on the actual charts of ours in TipRanks is now going to allow you to do one thing and one thing only that I think is one of the most important things us investors need to be doing before executing on investments. And that is making sure we understand trends of a company. Are there trends there? Are there patterns that we can spot? It's not great to time the market, right? It's always best to have time in the market. However, as investors, we certainly need to do our due diligence and at least understand patterns and trends if there are any. Is there anything going on? So I'll give you an example, guys. If I go over and check off insiders, I'm now going to get exactly when there are insider buys and sells going on. Now, the gray boxes, guys, whether it says sell or buy, the gray boxes mean that those were uninformative sells and buys. Now you'll get a colored box. We can move in here. You see a purplish color. That's an informative sell. And then if it's a green box, that's an informative buy. However, you now have the opportunity to play around with our charts and see exactly when insiders are buying and selling. And we can actually go a step further, guys. You can check off who exactly sold. You're going to get their position. I'll just click on a few here so you can see SVP and CEO here. CFO, my apologies. As I click through, you can see what this looks like. But I wanted the takeaway here to essentially be, if you want to trade or execute your investments as close to the insiders as possible, here you go, guys. This is the chart to be able to do that. Now, of course, you have this information in insider trading, but putting it on the chart actually allows you to take a look at trends. Now, I'm going to jump to one more stock in a moment, but I want to show you now, if I move over to earnings and scroll down here, you can see that we have the events, the earnings that were released. And I want to have you take note of something as we're looking at this, because as I said, charts for me are the ability to take a look at trends and patterns. So I have earnings that were released here, and immediately to the right, you see a slight dip here. And again, right, you have earnings released, and then there is a dip. I'll go in a little bit closer for everybody. Before earnings, you get this nice run up, the earnings, and now you get that stock share price coming down. Now, I would encourage every single investor to actually go, before they make investments, at least if it's close to their earnings date, to go play around with the charts and to go play around with when we're spotting the earnings being released. And the number one reason why, guys, is because of these trends and patterns. Now, if I know that typically it's not always 100% accurate, right? Nothing in life is 100% accurate. But if I know that typically before Apple presents their earnings, there's a stock run up, and then afterwards there's a sell off, it may actually give me now some answers as to whether or not I, as an investor, should go ahead and proceed to invest before or after earnings. That's a question that I get often from investors, whether it's through the community here at TipRanks, through all of you, through people on the street, friends, family. Do I buy after or before earnings? Now, I always share with them, make sure you're actually doing your due diligence and spotting trends and patterns if you can, guys. And now TipRanks is delivering through on the exact tool to do just that. Now I'm going to come back on the screen with all of you, because before I get to my third feature, which is honestly the most exciting feature for me, is I want to paint a picture for you all. And I want to put you guys in the shoes of being the coach of your favorite sports team. Maybe it's soccer, maybe it's football, basketball. I want you guys to envision being that coach. And whatever sports field you find yourself on, the basketball court, the football field, the soccer field, I want you to picture it's the last 1 minute of the game. And you're standing there and you got to take a look at the players that are on your bench. Now, you had just called a timeout and you got one opportunity to make sure that you are putting the best players on the field to deliver through on hopefully what will be the game-winning touchdown, the game-winning basket, the game-winning points. Chances are you're not going to randomly select those players and tell them to get out on the field. You're going to pull up as a coach your stats. You pick the best possible players to get back on that field and hopefully deliver through on those points for you. The reason why I want you all to picture exactly that feeling at the end of the game of being victorious and knowing that you selected the best possible players and you ultimately, hopefully, won that game, is because here at TipRanks, we just took our analyst ratings one step closer to, again, leveling that playing field. I'm going to go ahead and share the screen with you one more time. Now, guys, I'm going to go back to Apple. And I'm going to go here to analyst forecast. Now we can see, guys, before we made any new adjustments to TipRanks, added this very feature I'm about to talk about, we can see we can have some fun with what analysts are saying, whether it's all analysts, top analysts, and we can see that there's upside potential. And as I said, guys, we can scroll down here and see that there's a lot of analyst ratings on Apple. Now those analyst ratings, of course, we have a 1-star analyst here. We have an analyst with no stars here. We have an analyst with 3, with 5. Now, the question becomes, guys, what analyst can I put the most amount of my trust into? The reason I wanted to set you all up as a coach on that playing field, on that sports court, is because, guys, it is about getting as close to possible to picking the best possible players for what you're about to do. And we have now put onto TipRanks the ability for all of you to have the best analyst covering when it comes to the analyst that you are actually looking to follow. So what exactly does this mean, guys? I am no longer, as an investor, just going to pop onto Apple's page and take a look at those analysts, because I'll give you the example. If I scroll up and I see Eric Woodring, he just had a buy position, price target 175. Given yesterday, it looks really good, guys. But when I go to Eric's page, this is not exactly the analyst that I really want to trust, especially when I see that he's got a 0% success rating when it comes specifically to Apple. Now, guys, I want to have you take note that Eric looks like he's absolutely killing it when it comes to Snap One Holdings. Success rate 100%. But here's the deal, guys. I'm an Apple investor, and if I'm looking at Apple, I want to go with the best possible Apple analyst. So who's going to help me out the most? And we can scroll down here now on TipRanks, so we can see that the best analyst covering Apple for different time periods. We got 1 month, 3 months, 1 year, and 2 years. Now, this will all be now dependent on who you are as an investor, how you're investing. We went one step further, guys. You can see that under 1 month, it looks like Dan Ives here, success rate 61%. If we go over to 3 months, though, it's a little longer of a time period. We got Brian White coming in with a success rate of 72%. 1 year over, we have a success rate for Michael coming in at 85%. And then at the end here, 2 years, 80% success rate with Jim. Now, depending on how I am investing, I'm going to sub in different players. I'm going to put different players on that court or that field. That's exactly what I'm doing here at TipRanks when it comes to my investments. If I'm an investor for the shorter term, perhaps I want to just take a look at 1 to 3 months worth of a time period. Now, if I'm a long-term investor, perhaps Dan Ives is not exactly the analyst that I should be following, and I should take a look at Michael or Jim. But now, guys, as you can see, there are opportunities for us up here to click on the most accurate analyst and the analyst that has been the most profitable. So I'm going to go ahead and click on most profitable analyst, and we can see that the names actually just fluctuated. So now with 1 month, Michael has been most profitable. 3 months, it is Michael again. 1 year, Michael again here. It looks like he crossed the board. Michael is a solid guy when it's looking for most profitable analysts when it comes to Apple. Now, if I go back, guys, this all comes down to how I am investing. What is my investment style? Perhaps I'm not necessarily so concerned about the profitability, right? I want accuracy. I want accuracy in 1 month's time. Dan Ives here, according to our data, is most likely to help me out delivering through with the information and the call ratings that I'm looking for. But if I'm a longer term investor, like I said, I'll go to Jim when it comes to the accuracy. Now, if I'm looking for profitability, guys, I hit profitability. I can take a look now, and we're going to go into Michael. We can scroll down. We can see we have Apple, drop down. And here we are, guys. Now we have our chart of when Michael is calling for buys on Apple. I'm going to come back to the screen with all of you. Guys, our mission here at TipRanks, very simple. It is to level the playing field with every single feature and tool that we can bring to the table for you guys. Now, guys, it has been a pleasure and an honor to do webinars with you in 2022, and it will be a pleasure and an honor to walk with you through 2023, week to week, every single Monday if you're a premium and ultimate user, and if you're a basic user, every single Wednesday to go over our economic backdrop, our tools of the week, and our new features, guys. We got one mission and one mission only here at TipRanks. It is to level the playing field. With that said, guys, I hope you enjoyed today's webinar. I hope to see you all on Monday's webinar as a premium or ultimate user, guys. Thank you so much. Happy New Year to you all, and I look forward to happier days worth of investing ahead of us. Thank you so much, guys. I will see you all next week.